The June jobs report just out. 209,000 jobs were added last month, with the unemployment rate little changed at 3.6%. Joining us now to discuss the crypto markets is Fairlead Strategies founder and managing partner, Katie Stockton. Welcome to the show, Katie.
Thanks so much. Good morning.
Happy Friday. I just got to give everyone a happy Friday this morning. All right. Tell us about...
Yes.
we took a look at the Bitcoin chart at the top of the show. We have another chart here that shows Bitcoin's support and resistance levels. We're going to get that up on the screen. And when we do, tell us what we're looking at.
Right. So with Bitcoin, we have seen an uptrend established, and yet there's still pretty good resistance overhead. If you see on the shaded area on the chart, there's a level that's just shy of 32,000. It's, I think, 31,850. It's a moving target. A breakout above that to us would really officially reverse the downtrend that preceded this up move that we've seen of late. So that would be another encouraging development from Bitcoin. We've obviously seen longer term momentum shift to some degree. It's falling short of being positive, but it's at least neutral and improved versus what we had gotten accustomed to for a while. So we're glad to now see the moving averages point higher. We would be seeing a breakout above that level as an actionable positive catalyst, not just for Bitcoin, but for the broader cryptocurrency markets, in that Bitcoin really kind of leads the charge higher when that tends to happen.
Yeah, I love saying the Fibonacci level. There's two levels here. We're talking about breaking past the 31.9K and then that 35.9K that you just mentioned. Tell us more about this secondary resistance.
It's just shy of 36,000 for Bitcoin. It's still a far cry from the levels we were talking about a couple of years ago. But if we do see a breakout, that is the next hurdle on the chart. And it is, as you mentioned, derived from the Fibonacci retracement levels. And they tend to be very relevant for currencies broadly. Anything that trades with very deep global liquidity tends to lend itself very well to the discipline of technical analysis. You'll see that the charts can be really reliable in terms of the levels, support and resistance levels, and also trending analysis. So we find that it's very valuable to derive these Fibonacci's. 36,000 would be targeted. It wouldn't mean necessarily that that's where the uptrend stops, but it would be a natural place for at least a pause.
All right. And now let's compare Bitcoin with Ether. What are you seeing weekly when we take a look at the two largest cryptos?
Overall, long term, they're really range bound versus one another. So Bitcoin versus Ether is a long-term trading range in that ratio. And yet within the trading range, we have seen intermediate term momentum favor Bitcoin over Ether. And we see that typically during more risk off environments. So it's a little bit surprising given that we have seen uptrends emerge for both cryptocurrencies. And yet we want to defer to what the market's telling us, which is that Bitcoin is for now poised to outperform within the context, at least, of that longer term range. We do tend to see cycles emerge shorter term where we'll have risk on for a couple weeks and then it goes back to risk off. So there's always cyclical moves within that context to take advantage of. But for now, we would really sort of overweight Bitcoin in our positions if we were to have a portfolio.
And now another mention of Fibonacci. You point out how crypto exchange Coinbase broke out above the trendline resistance extending back to August of 2022. Explain that significance for us.
You know, it's something that we're actually seeing a lot of, not even just in the cryptocurrency market, but in high growth stocks more broadly, where those that had downtrended for a year or two then went sideways for another year or so. That sideways action is now giving way to breakouts, which makes the sideways action look like a basing phase. And that's certainly the case for Coinbase. It has what we call an inverse head and shoulders formation. That's simply a description of how we've seen support and resistance levels play out. It did advance above the trendline resistance, which we call the neckline of that formation. And the next targeted resistance is around $88. So we are compelled by the basing phases. We wouldn't want an entire portfolio to look like those kind of turnarounds, but rather we would always prefer to see stocks that have established long-term uptrends. And yet we do think there's some opportunity here.
Katie, thank you very much for joining the show this morning.
Of course. Have a nice weekend.
You too. That was Fairlead Strategies founder and managing partner, Katie Stockton.